Welcome to this Mahurat trading special. Let me wish all the viewers of CNBC TV 18 a very happy Diwali, a very prosperous year ahead. Well, for the preliminaries, I'm Lata Venkatesh, and with me is a very beautiful looking Sonia Shenoy and a very handsome, gorgeous, austere Anuj Singhal as well. Happy Diwali to both of you. Looking great.
Happy Diwali, Lata. Happy Diwali, Anuj. And here's wishing all our viewers a very, very happy Diwali. At this very moment, may Goddess Lakshmi be at your doorstep, bringing you a lot of happiness, success, and whatever you want at this juncture. But Lata, it's been a great Samvat for us. I mean, 27% higher from last Samvat to now. We couldn't have asked for more in terms of positive cues.
Oh, absolutely. I mean, from Samvat to Samvat, we can remember, you know, last October, we weren't even very clear that we would have a definitely positive, strong, majority-backed government. It was only on December 4th that we got the state elections, and the whiff of a majority government was in the markets and in our minds. So October was still a kind of a lackluster month. So definitely from Samvat to Samvat, the Sensex and the Nifty with that 27% gain, and the mid-caps, if you choose certain indices, you actually get a 48% gain. And some specific stocks giving you, triple-digit gains, 6 times gains, 5 times gains are all reflecting that positivity. But what is special about this Samvat is that the hope is not run out. The hope now looks like we are at the start of a 3 or a 5-year or a 10-year good times, and that perhaps is what makes this Samvat special. I can't remember a Samvat in 20 years of working as an economic journalist, and probably 14 years covering markets, that we have had this much of a cheer for a 10-year horizon. Maybe this was the case in 91. I didn't cover markets at that time, but not since I started covering, which was I think 95, the first Samvat that I covered. We have not had this much of hope and happiness and optimism about India's future.
Yes, like Madhukela said, ये तो सिर्फ trailer है, picture अभी बाकी है. But Anuj, hi, good evening, happy Diwali to you. This year the gains in the market have been so good that I think it's time now to put away the fuljaris and the anars and bring out the rasi bombs.
Indeed, Sonia, happy Diwali to you too, Lata, and to all our viewers. Yes, the thing is that somewhat trading is about token trade. You go out. Even if you are the most bearish one, you go out and buy. Even if you have to buy an index put, you go out and buy, take a buy trade. So it's about token trade for today. But really, as Lata said, this really has been a great Samvat for us. Really, this has been the market in which you would have made money. You would have made money only in equities this year. I mean, compared to commodities and a couple of other asset classes, you would have made money only in equities. And within that, you would have made a lot of money if you were playing Indian market. The index itself gained 27%. In a Samvat, if the index gains 27%, clearly a lot of stocks would have gained a lot, and that's what we have had this year. And as Lata said, really, a lot of people are talking about the mother of all bull markets. A lot of people are saying that the kind of bull market that you had in 2003 to 2007, that would pale in comparison if the new government gets things right, and if of course the global cues support. We are at very crucial juncture right now, Sonia. 8,000, 8,050 zone is the one to watch out for. I remember, last time before Samvat, we had made the point that the market may peak out at some point during Samvat, and that was only true for 2 or 3 months. And after that, the market had a spectacular run. This time around as well, the data is telling you that, maybe a peak is somewhere around the corner, but then we've seen in the past 3 or 4 months how it's taken just 2 or 3 days for this market to reclaim the old highs and get back to new highs. Maybe this is going to be that kind of a Samvat again, in which, you keep making new highs. You just have to get your stock right. Maybe you'll get something like a TVS Motor this year as well, which gained 500%. But if you get good stocks, if you choose good stocks, you would get 400, 500% returns. But even otherwise, a balanced portfolio can still deliver 20-25% return.
No, actually, the correction that you are talking about, even if it extends, is probably for a month. There is no denying that in the build-up to the budget, once again from December, we are going to, see the traditional pre-budget rallies. Yes. Of that, there is no doubt. And the government has given you enough to cling on to. Up until 2 weeks back, or even 1 week back, you could perhaps point a finger and say that not much has happened. But the activity of the last 1 week gives you a lot of hope. And they are very sedate and yet seminal steps. I mean, it's probably marketization of diesel prices at a very ominous time, at a very convenient time, but that's how you should begin.
Yes.
And the fact that they've announced something for the longer term is a positive. As well on coal prices, within that ordinance, there is that small hope that coal mining will be commercialized, that private parties will be allowed. And therefore, an immediate step correction is there. But within that, within the small story is a big hope, a story of hope that larger corrections will come. So I have no doubt in my mind that even if FIs are balking at this point in time, probably taking profit for global reasons, the build-up, pre-budget build-up, and the response to a government which looks that it has the right set of actions in place will come. A correction could come. I mean, we could stall. We may not even make 8,200, past the previous high up until the end of the year, or almost up until the end of the year. That's possible. But that will still be a comma, not even a semicolon in this period of hope. I think there are no full stops here for the rally, not in any definite sense, unless we get things seriously bad, or there is again a falling apart of global markets, which clearly doesn't seem the case. I mean, yesterday's European data, or rather today morning's European data, if anything, looks like even the global picture is not as bleak as was made out to be a month ago.
All right, so it is a very happy Diwali indeed for all.
The Globe is telling us a happy Diwali actually by
for
giving
all
you
our
good numbers.
investors and our viewers. So let's kickstart the show. We have 1 hour of Mahurat trading, and on this special day we have a whole host of big market voices who will be joining us in the next 1 hour. Rakesh Jhunjhunwala, Ramesh Damani, Manish Chokhani, Sameer Arora and Madhu Kela. So all of them lined up in the next 1 hour. Not just that, also joining us today we have Ramdev Agarwal of Motilal Oswal Securities, Ajay Srivastava of Dimensions Consulting, and S. Naren of ICICI Prudential.
All right, let's invite our first guest in. Ajay Srivastava is with us. Ajay, you're looking really gorgeous. A very happy Diwali to you. You're in your Diwali
Oh,
final.
thank you, Lata. Same. Thank you so much.
All right. Well, let me ask you whether you feel as good. Has any Samvat felt as good in terms of a longer-term hope for the economy and for the markets? I can't remember one. Probably 1991 felt like that. I wasn't around covering markets there.
I think you're right, Lata. I think I think you qualified yourself by saying long term, so you hedged your bets very nicely. But no, I think you're right. Things are looking pretty good at this point of time. Things are looking fine, except the fact, and I keep saying the caveat is that even in the boom rally, it's not easy to make a money. It's not like you splurge on equity and you're going to make your money here. So even in this rally, which we expect to continue, we expect a lot of good things from the government to happen. I think there is a flip side. And the flip side is that, one, we are so dependent on international flows that you saw what happened in 2 weeks back or less than 7 days back. So let's put a caveat to ourselves saying international flows make a difference to us, irrespective of what we do. Number two is that local demand. Local demand needs to kind of get up to something which is sensible. Pump priming may be required eventually, even in the budget or around that time. It's not automatically that the demand is going to go up, because you are having a fiscal deficit problem where you're compressing the expenditure. So yes, things are looking good. Government is saying they're nice things, but let's not forget this is a rally driven by global liquidity, not just by the Indian factors. And you've seen what happened last week is a testimony to that. So I would put a caveat to say, buy sensibly if you have to make money even in this rally. Wrong purchases, wrong timing could end up into still losses in spite of a point-to-point rally that you see.
Oh, I completely agree with you, Ajay. It's good to put that cautionary words even on Diwali Day rather than, say nice things simply because you have to say nice things. But at this point in time, do you think the global cues, which look fairly negative 2 weeks ago, look a little less so at least? I mean, US has just pulled back. I mean, Europe has just pulled back from recession. Expectation of the PMI was 49.9. That would be contraction, but it has actually come at 50.7 compared to 50.3 in the previous month, that is September. So are we just about, not as bad as we thought we were 2-3 weeks back?
Of course, no, I think you're right. Things have improved over, that's why I said the things change so fast. In a week's time, we were like in despair. Less than a week back, we are finally nicely hopeful. But I think let's not forget that the Indian market, I think, Lata, that's the important part. Indian markets are at a very expensive inflection point today. None of the stock that you can pinpoint are cheap at this point of time, which means that they have to generate earning disappointment. You saw what happened to Infosys, TCS, etc., could lead to a great amount of discomfort in the market. So yes, there is a bull rally. Yes, things are positive. I agree with all you think. But I also believe that market is also equally expensive this point of time. It's not a cheap market where rally is for the given in terms of share price. It can be a rally for the broader market. But for individual shares, everything is at P's of 30 and above.
Ajay, hi. Good evening. Happy Diwali to you and your entire team at Dimensions Consulting. We were speaking with Ramesh Damani yesterday. In fact, Lata was speaking with him, and he said that the Japanese bull market lasted for 25 whole years. I know it's very difficult to predict how long this bull market will last, but are you getting a sense that with all the cues stacked up, this could be, at least a half a decade bull market for India now?
I see no reason, because you're right. I think Ramesh is right, absolutely. There is no doubt that we should see the onerous burdens of the last few years of, and one of the biggest onerous burden was the corruption in the system. Seems to be prima facie under control or getting under control at this point of time. I think that should give us a lot more resources to play with, a lot more efficiency in the government, etc. But it's all untested at this point of time. To say that we have a 20-year rally, I would still say yes, India should grow. At the end of the day, we are 500 million of the people don't even have full food to eat. So if they want to eat and clothes and housing, etc., we should be growing at 6-7% for next 20 years. There's no doubt in my mind. But I would still put a caveat there to say that, listen, we still need to find a way to become a more efficient producer. We are a high-cost economy at the end of the day. So intentions are good, everything is good, but to get the bull run, Japanese were the most efficient producers. If you look at the bull run, they were the lowest cost producers in the world for the 20 years that you're talking about. We are not today. So it's nice to analogy is good, but I think we have a lot more challenges to us than perhaps the Japanese had that point of time.
Yes.
Okay, Ajay, hi, good evening and happy Diwali to you, your family and your entire team.
Thank you, same to you, sir.
Okay, so now it's time about stock picking, Mahurat trading. A lot of our viewers want to know the next Diwali pataka. There have been a lot of stocks which have done well this year. Any 2 or 3 stocks that you believe are likely to do well? Not maybe, multi-baggers, but decent returns over the next 1 year or so.
See, to us, safety is important, and I think one would tend to pick out from various spaces and say, where do we go in various spaces? If you look at, I think, the consumer space, which is one which everybody looks at, I would still believe that consumer plus telecom, story, and financial services coming together is Aditya Birla Novo. I think it's a very smart play in 3 sectors of the economy into one stock. Eventually, they may split and give you the multiple benefit. I would tend that's what's going to happen. I would say, so therefore, in terms of consumer space, I would say AB Nuvo, which has telecom, retail, and financial services, could be perhaps a good market, at least an above market performer in the sense that we talk about. We already spoke about Spirits Company. I think they'll be above market performer by and large. The United Twins will be the above market performer in my view. And I would still believe that L&T should almost give us the best returns in the Nifty today in the next 1 year, because any of the projects to fructify, whatever the government is talking about, it has to happen only if L&T comes into play. There is no other player in the market of that nature who can do the infrastructure projects the way L&T can do it. So anything has to happen in the economy. L&T is the play. I think it will happen. So if you look at the engineering cum construction, I would say L&T. If you look at the retail space plus telecom space, I would say buy Aditya Birla Novo kind of stuff. I would still say in pharma space, Sun Pharma would be one of the best bets for you, because post the merger, you'll see the kind of profitability coming out of Ranbaxy that you not even imagine, because we know Ranbaxy internally has got a lot of cost issues and attached to it. So you go sector by sector and you can pick up 1 or 2 winners. I think, as Lata said, it's an open sesame. It's time to make money.
Okay, well, I have a couple of more questions in that theme for you, Ajay, but let's get a little more of the Samvat comparisons. Our colleague Nigel is standing by. Well, in the past 1 year, the rupee has been stable at around 61.5. That's the one that's perhaps outperformed most currencies. Commodities have not been a very great place to be, but equities have been rocking, as Anuj just put it. Nigel, tell us now, which stocks have been the blowout performers, or, of course, the few big losers also from last Samvat to this one?
Well, it's been a great year for equity markets, but the commodity space has been under some pressure. So just take a look at the perceived safe investment. Gold has lost close to around 6% just in the last 1 year. Silver is always more volatile. That's lost more than 20%, while we have seen sharp cuts on the likes of copper as well as crude prices. All of them are trading with sharp cuts in comparison to a year ago. But for the equity space, it's been absolutely rocking. The Nifty is up more than 25%. The Bank Nifty has gained more than 40%. And what's encouraging is that the mid-cap as well as the small-cap space, they have outperformed the two key indices. Take a look at some of those Nifty gainers. BPCL, Axis Bank, Maruti Suzuki, big gains being seen on all those stocks. PNB as well as BHAL, we have seen big gains on all those stocks. The defensive stocks as well, they have been left behind, but not far behind, because we have seen big gains on Lupin, Tech Mahindra, as well as HCL Tech. They have given you gains in excess of around 35%. The heavyweight stocks that have really driven this the rally, and that's the reason why the Nifty is at the high point, is because we have seen the buying into the likes of L&T, ICICI Bank, as well as the HDFC twins. Some of those heavyweight stocks, though, they haven't really participated, because Reliance Industries as well as ITC, they have been underperformers, relative underperformers that is. They have gained only between around 5 to around 7%. But there have been a few losers even from the Nifty pack. So JSPL, we have seen that DLF as well as Kane India, they have given you losses in excess of around 10 to around 40% in the last 1 year. The mid-cap space, though, big gains being seen on a lot of stocks. So Apollo Tyres has given you big gains. Ashok Leyland as well as Adani Enterprises, big gains being seen on all those counters. Add to the list something like an 8%.
Nigel, just hold on to that thought. The pre-opening rates have come, and I think the Sensex is a pleasure to read. 0.6, not the Nifty, it's minus 1.6%. I mean, they're bizarre, so I just thought I would read the green rates, but some of them are doing very well. JSPL is continuing with its correction, 2.7 higher. M&M is up 2.3. Ultratech Cement is up 2%. While speaking of Ultratech Cement, maybe we should see if there is a trade on AB Nuvo as well, since Ajay so excellently explained why it should be positive. Okay, that's also started with a near 1% uptick. Coal India up 1.4. HCL Tech 1.2, Kotak Mahindra 1.1 with good reason. Great results yesterday. Asian Paints 1%, Tata Steel 1%. Those are some of the green rates that we are getting on the screen. Anything in the red? Oh, these are bizarre rates, and I'm not going to read them. Some 10% down on HDFC Bank. I mean, that's rubbish. Ajay, just one question to you, because I just want to continue with that conversation you were having with Anuj about AB Birla and L&T. How it would be best placed to ride. You know, the government is very nicely untying some of the terrible knots we had in the energy sector. They've untied some bit of the coal problem. Commercial coal mining has almost been promised as well, diesel prices. But all these are very beleaguered stocks, you know, power stocks or finance stocks. How would you play this entire game?
See, I think if you look at, that's what I said, you know, if you look at the engineering sector, Lata, the lots of the beleaguered stocks sit with lots of debt on it. Right?
Yes.
And that's the problems area. The debt problem is not getting sorted out in this country in a hurry. And which is why I put a caveat to this whole exuberance was that I don't think so we have that much capital coming to these sectors given all the past. You know, you can't remove all the 5 years of history of issues and problems overnight by saying something will happen. The same bureaucrat is working on the ground, and he's not going to change overnight the way he works. Intentions can be pious, but implementation could be devilish. And therefore I say to you that let us stick, and if you look at the last rally, I think somebody spoke of the names, they were all the large cap names. I would still say stick to the large cap names to manage this rally out for the next 6 to 9 months. All the liberalization possible which is going to happen will have to come first to the big players before it goes so small. There's a coal liberalization. I think JSPL you mentioned is a given that you should buy it. It's a speculative stock. I would not say it's a good situation to be in, but it's a wonderfully speculative stock with enormous returns sitting on the table. Because if they get the coal mines, they are back in action on a big time basis. Market is corrected and do it. And which is coming back to the theme more than the government untying. The theme should be, should you see a big correction, should you see an odd event, that's the time you jump in the fray. At the highest point of the market, don't go and commit a capital.
Fair point, Ajay. It was a pleasure speaking with you, and thank you very much for joining us on such an auspicious occasion.
Thank you very much. All have a good Diwali.
You too. Well, let's take a break on that note. We are coming back with the special Mahurat Trading Day. Uday Mukherjee is waiting by, and of course we will have other guests joining us as well.
Happy Diwali, all Indians. Happy investing. Believe in India. Make money. And watch TV 18, CNBC TV 18.